Right now, millions of people are buying crypto, watching green candles, scrolling Twitter, and feeling like this time is finally different. But here's the uncomfortable truth. 90% of them will still lose money, even in a bull market. Not because crypto is a scam, not because the technology doesn't work, but because they're playing the game completely wrong. And most don't even realize it. Most crypto investors repeat the exact same mistakes every single cycle. They wait for confirmation. They wait for YouTubers to turn bullish. They wait for price to prove itself. And by the time everything feels safe, the smart money has already bought weeks or months earlier. Retail investors don't lose because they're stupid. They lose because they're emotional. They buy when price is high and confidence is high. They sell when price is low and fear is everywhere. And after every cycle, they say the same thing. Crypto doesn't work. But the truth is, they never had a real strategy to begin with. In this video, I'll break down exactly why 90% of crypto investors lose money, and more importantly, what the remaining 10% do differently. We'll look at real market behavior, psychology, on-chain data, and how smart money actually operates behind the scenes. No hype, no moonboy predictions, just a clear, data-driven breakdown of how this market really works. And if you want intelligent crypto insights instead of emotional noise, make sure you're subscribed. This channel is built for investors who want to think long-term, not chase pumps. Buying emotions, NOT structure. The number one reason most crypto investors lose money is simple. They buy emotions, not market structure. When prices are pumping, everyone feels smart. Twitter is bullish. YouTube thumbnails are screaming, this ISIT. Fear of missing out takes over. But markets don't reward excitement. They reward patience. Smart money buys when price is boring, quiet, and ignored. Retail buys when price is exciting, trending, and emotional. This is why most people end up buying tops without realizing it. Now here's the interesting part. By the time retail feels confident, smart money is already planning exits. Waiting for confirmation. THE confirmation trap. Most investors believe waiting for confirmation is safe. In reality, it's one of the most expensive habits in crypto. Confirmation usually comes after the move has already happened, after price breaks resistance, after news turns bullish, after influencers flip positive. Smart money doesn't wait for confirmation. They position themselves before it appears. This is where retail usually gets trapped. They confuse safety with lateness. Markets reward those who accept calculated uncertainty, not those who wait for guarantees. No risk management. Another major reason people lose money is brutal but true. They don't manage risk. They gamble. They go all in on one coin. They use leverage they don't understand. They never define invalidation levels. When price moves against them, panic kicks in. They sell the bottom, then watch price recover without them. Smart investors think in probabilities, not predictions. They size positions carefully. They accept losses as part of the game. Retail tries to avoid losses entirely and ends up losing everything. Most people don't realize this. You don't need to win big trades to be profitable in crypto. You just need to avoid catastrophic mistakes. Chasing hype, ignoring data. Retail investors love narratives. AI coin, gaming coin, next Ethereum. But narratives without data are dangerous. Smart money looks at on-chain accumulation, liquidity zones, market structure, supply and demand. Retail looks at likes, views, and excitement. This is why they always arrive late and leave early. Selling TOO early, ORTO late. Another classic mistake. Retail either sells too early because they're scared or too late because they're greedy. They take profits at the first green candle, then watch price go 5x without them. Or they hold through massive profits and round trip everything back to zero. Smart investors scale in. They scale out. They follow a plan. This is the part most people don't want to hear. Your biggest enemy in crypto isn't the market. It's you. Short-term thinking in a long-term game. Crypto rewards patience more than intelligence. Yet most investors want results in days, not months. They jump from coin to coin, from strategy to strategy. Smart money builds positions slowly. They wait for cycles to play out. They understand that time is leverage. Retail wants instant gratification and pays the price for it. WHYTHE 10% win. So what does the winning 10% do differently? They buy when fear is high. They sell when confidence is extreme. They manage risk relentlessly. They focus on data, not noise. They treat crypto like a business, not a lottery ticket. And most importantly, they stay emotionally neutral when everyone else is panicking. Of course, nothing in crypto is guaranteed. Markets can stay irrational longer than expected. Bitcoin still controls the broader market. If Bitcoin breaks key levels, even the best altcoins can bleed. This is why discipline matters more than predictions. Crypto doesn't make people rich by accident. It rewards those who are patient, prepared, and emotionally disciplined. If you're losing money in crypto, it doesn't mean you're late forever. It means you're early in learning how the game really works. The question is simple. Will you repeat what 90% are doing, or start thinking like the 10% who consistently win? If this video helped shift your perspective, subscribe for more data-driven crypto insights, and I'll see you in the next one.